The Bank of the Lao People's Democratic Republic, or BOL, has pledged to ramp up its efforts to tackle critical economic and financial obstacles, which includes soaring inflation, volatile exchange rates, and escalating commodity prices. During the National Assembly session held on Monday, Mrs. Watana Dalaloy, the acting governor of the bank, assured lawmakers that decisive steps would be taken despite some progress already made. Mrs. Watana underscores BOL's commitment to monetary policies for 2024, employing strategies such as issuing bonds and managing government deposits to regulate the money supply. Stabilization of the exchange rate will be achieved through flexible, market-driven mechanisms under state supervision, while commercial banks will be urged to enhance currency exchange services at international checkpoints. Efforts like the EasyKeep app and the centralized Lao foreign exchange system will streamline currency exchanges for both citizens and tourists, aiming to modernize the foreign exchange system and reduce dependency on informal markets. These initiatives are part of the BOL's plans to help Laos reach a single-digit inflation rate by sometimes in 2025, with an interim goal of 11% deemed achievable with the implementation of these policies. Mrs. Watana emphasized the importance of legislative reforms and public awareness campaigns to channel more foreign currency into formal systems. Collaborative efforts with relevant agencies are underway to regulate prices of essential products, particularly imported goods affected by fluctuations in exchange rates. For the year 2024, BOL has set ambitious monetary targets, including capping the growth of the monetary supply (M2) at 25%, ensuring that credit provided by the banking sector reaches 65% of GDP, and reducing non-performing loans to below 3%. However, challenges persist concerning inflation exchange rates and foreign currency reserves, which have yet to meet the desired benchmarks. Despite a decrease in inflation from 41.26% in February 2023 to an estimated 20% by the end of 2024, Mrs. Watana highlighted that relevant inflation persists due to weak domestic production, fluctuating exchange rates, and a heavy reliance on imports. She acknowledged that addressing these issues necessitates comprehensive measures to enhance currency stability, implement price controls, boost domestic production capacity, and alleviate external pressures. The preliminary sitting, continuing until December 11th, will focus on overcoming financial and economic challenges, discussing education reforms, and evaluating the performance of various government bodies. Participants and the public can engage in discussions and share their views during the session via the hotline at 156, email at nalao.156@gmail.com, or through the Lao NA application.